Hello, welcome to the latest video interview. I'm Ben Colclough, with me is Eddy Pieniazek, our Head of Consultancy. So Eddy, what's your opinion of the current state of the airline market?
Well, I guess the first thing we look at is traffic. Airlines across the globe are reporting good, strong recovery in traffic figures. The year-on-year growth figures have been very encouraging so far. I think we look at some of the major areas like Latin America, there we're seeing 20% growth, Asia Pacific's 11%, Middle East 17%. I guess if there is any downside, we're looking at Europe, which is down minus 6%, and North America down 3%. Okay, Europe's had its volcanic disruption, and there's still an underlying weakness behind that due to the financial crisis and government spending cuts. The growth in Asia is as we've said, is pretty robust, and that's currently outweighing some of the concerns we have over the EU's debt problems. But at this rate, if Asia carries on its merry growth path, we should see the Asian economy comparable in size to Europe and the US by 2015. And this traffic and yield improvement we'd expect to see, if it could be sustained, it's probably going to require the airlines to maintain the kind of capacity discipline that we've seen over the past year to 18 months. And talking about capacity, in terms of deliveries so far this year, well, if you look at the airlines themselves, they've across the globe they've taken delivery of about 450 aircraft so far this year. There's another 600 due for delivery, so we'll be looking at a figure of about 1,050, 1,080 deliveries, commercial jet deliveries this year. And that compares pretty much equally with last year, where we had about 1,100 aircraft in total. So in terms of the number of aircraft coming into the marketplace, that's still something which is running along at a steady pace. What Boeing have recently announced is that they're going to increase the 737 production rate up from the current 31.5 aircraft per month to 35, and it'll reach 35 by the first quarter of 2012. And that follows on from Airbus, who've also recently announced an increase in the production rate for the A320. So we've got a lot of new aircraft coming on stream, and we need to see how the airlines manage that capacity increase in terms of how they release other aircraft and maintain that traffic and yield perspective.
So does this mean that aircraft financing worries are over?
Not yet, but there are some good signs out there. I mean, for example, Aircastle recently announced that they'd secured I think a $530 million debt financing, and AWAS did raise a similar amount in a secured term loan in the US capital markets. Now, these are good events to happen, and so it shows that there's some improvement in the financing options. But we mustn't forget that new deliveries are still pretty much being heavily supported by ECA, Export Credit Agency backing, and we're not yet really seeing any sustained improvement in the used market activity. There are some signs that it's picking up, and there's a little bit more transaction activity in the used market than, say, 12 months ago, but it's still from a low base, and we're still seeing those kind of figures ramping up.
Any significant events at the recent Berlin Air Show?
Well, apart from the $11 billion order from Emirates for another 32 A380s, it was a fairly quiet event. There were some other Airbus orders happening, but I guess a lot of the material is being saved up. A lot of the orders and the impending announcements is being saved up for Farnborough in July. But talking about Emirates now have 90 of these A380s on order. They've had 10 of them already delivered, and I think I was reading recently that they plan to hire 700 pilots during the course of this year and next year in order to be able to operate the aircraft that they have on order. So it's an awesome requirement, and it just shows how the Middle East is really driving some of the dynamics of the marketplace. And Emirates are also going to start to roll over some of their older A330s and A340-300s and 500s and some of the older 777s. Not that they are particularly old, but they're rolling over some of their fleets as well. So it's a very dynamic operator. Looking at the A380 specifically, there are 6 airlines now operating, I think, a total of about 30 A380s. There's another 17 airlines in total, I think, have ordered the A380, about 230 orders. So as a program, it's actually not doing too badly, although from a residual value perspective and from an operational perspective, you're probably still looking at the fact that there is a pretty large exposure to a single operator. But I guess over time, and you have to think 5, 10, 15 years ahead, that's probably going to balance out a little bit better.
And how is this impacting on aircraft values?
Well, the market value trend is still pretty much downward, and I think as Les mentioned in the previous video interview. And you'd probably expect that in what is still a relatively soft market, and from assets which depreciate over their economic lifespan. Some of the types that we see in the marketplace still haven't responded yet to the market, to any sign of recovery that we've seen in the past. For example, the A300-600R, I think 25% of that fleet is currently parked. So there are some types which are responding slowly to the marketplace, others are responding a little bit quicker. It's a fairly mixed picture. But in terms of just looking at market values, I suspect a more pertinent observation would be, is this downward movement in value behaving in line with what we'd have expected? Is the depreciation happening faster or slower than we had imagined? And I guess that's where our new rating service actually comes in.
Could you elaborate on the ratings products?
Well, we're now ascribing ratings to about 80 different aircraft, commercial aircraft types and variants. And we're assigning a rate of depreciation, and that's based on anticipated year-on-year changes. And we express that as a letters A to F, different rates of depreciation. And we also assign a measure of volatility of the actual market value performing against projected value, against base value. And that is how volatile can the market to base value ratio be. And we scale that on a level of 1 to 9. So there are two components to the rating. So as these ratings also change over time, we have the option of adding a positive or a negative watch, a plus or a minus to the rating as well, to indicate how we see the outlook changing for a time. So for example, if you're looking at say a 2010 vintage A320, currently we would ascribe that with a rating of an A6, and the A indicates it's got a depreciation profile, depreciation rate of below 8% per annum, assuming zero inflation, and the 6 indicates a volatility scale, and the 6 in this instance is 27.5%. So from here on in, it's not just values and lease rates we're looking at. These remain vitally important measures, but we can now add to the universe of supporting data that we have that helps to make aviation financing easier to do.
Thank you very much, Eddie. Interesting as always.
You're welcome.
And thank you very much for joining us.